Float automatically pulls in your invoices, bills and bank transactions from your accounting software as the first step in building your forecast, but often that's just part of the picture. For everything else, like expected income or costs, you'll want to add budgets. Now here's how Float uses budgets. It looks at each cell in your forecast and uses the highest value, either the budgeted amount, which we can see here on the right, or the total of the invoices, bills and bank transactions, which is on the left. Budgets act as placeholders for expected cash movements and will automatically fill up with invoices and bills, so there's no risk of double counting. At the end of each month, any remaining budgets drop away and only the actual figures that happened are used. When creating budgets, there are a few key things to remember. Make sure your budget amounts include tax, set the date to when you actually expect the cash to move, not the due date, and you can add one budget per account row or several. It's completely up to you. Breaking your budgets down into individual customers or companies allows you to achieve more accuracy in your cash flow. To add a budget, just click the blue Add button, which you can do from here, and add an income or a cost budget directly. Alternatively, you can hover beside an account name and a blue plus sign will pop up. There are 4 types of budgets in Float, giving you plenty of flexibility. First, we have auto budgets. These update automatically based on your past month's actuals. You can choose to use last month's numbers or an average of the last 3. Just set it once and Float keeps it up to date each month. Next, repeating budgets. These are great for regular expenses or income. You choose the amount, the date, and how often it repeats. You can even set it to increase or decrease over time. If you're not sure what amount to start with, you can use the last month's total or the average of the last 3 as a starting point and update them whenever things change. Multiple repeating budgets can be added to the same row in Float, and Float will calculate the total to use for the month. Then there's the one-off budget. This is perfect for a single one-time cost or income, like an investment round or a big purchase. And finally, linked budgets. These are based on other budgets in your cash flow. Just set a percentage and Float will keep them in sync with the source budget, so if the original budget changes, the linked one updates too. Now you might be wondering, can I import my Xero or QuickBooks budget directly? The answer is not quite. That's because Float works on a cash basis while your Xero or QuickBooks budget is based on profit and loss. But here's what you can do. Export your budget to a spreadsheet, adjust it to reflect cash timings, and then use Float's spreadsheet data feature to copy and paste it right in. That can be found from the Add button and here. Now you know how to use budgets in Float to plan ahead with confidence. With a little setup, you'll have a clear and accurate cash flow forecast in no time. And if you ever need help, check out our support articles or chat with our team.